So hi and welcome to the Data Explorers Market Update with me, Will Duff Gordon. So today we're going to talk about media and News Corp and British Sky Broadcasting in particular. But before I do that, and on the subject of media, we should thank our sponsors. We've got a sponsor which is very exciting, which is BNY Mellon, so grateful for them. So the UK government has essentially cleared, given their blessing for the marriage between News Corp, the US company, Rupert Murdoch's company, buying out the remaining stake they don't own in British Sky Broadcasting. It's been dragging on for a long time, and the initial bid that came in was at about 700 pence, and that was last June, and BSkyB is now trading at 833 pence, way above. So clearly the questions now become, how much will News Corp have to pay to buy Sky? And secondly, who is going to basically have the biggest say in what that price should be, which particular shareholders? These are the key questions that the Sunday press was wrestling with. Looking at our data, what we can see is a definite transition on the shareholder register of Sky from the traditional sort of long-only fund managers owning their big stake to people who don't lend their shares, which would typically be retail investors or hedge funds. So institutional ownership from funds who lend is at a 3-year low in Sky, with a sort of 35 million share reduction over the last 3 months, basically. So clearly, more people have come onto Sky's register of the type of risk-arb hedge funds who are there for a singular purpose of agitating for a higher share price, and they're going to be pretty patient about it. But they are taking the risk, of course, that the deal ends, or that BSkyB is not bought for because they're asking too much for a price. But these guys are past masters at agitating aggressively enough to get a high price, but not so aggressively that the deal collapses. But why did so many of the traditional fund managers kind of sell their shares at 700 pence thinking that was great? Well, I think that comes down to something that was edited out of my piece today, but I can say it on camera, which is they felt that the body of people coming together to try and protect the freedom of speech was greater than perhaps those people that were owning Cadbury's, who were thinking that a 100-year-old chocolate company should remain a British company, not be taken over by Kraft, because in that case, institutional investors stayed on the register, did not sell their Cadbury shares and agitated for a higher price. In the case of Sky, maybe some of these fund managers felt, look, we should take this 700 pence offer because while it's there, because it's going to disappear, because this deal is not going to go through, be allowed, the government's going to reject it and the shares are going to fall. So that hasn't happened. The government has agreed to it with the slight caveat about Sky News. And here we have a situation whereby it's now balls in the court of Rupert Murdoch very soon to say how much he's going to pay. So what though of News Corp shareholders? Because they're clearly going to try and prevent Rupert Murdoch paying more than they need to get BSkyB. There's obviously an upper limit. Well, News Corp, unlike Sky, has a very sort of unconcentrated shareholder register. The San Francisco fund Dodge & Cox, they own 8.5%, but no one else owns more than about 3%. So there's obviously plenty of people who will have a say, and they're mainly the kind of the traditional titans of the fund management community. Finally, meanwhile, Virgin Media is a rival provider of many of the services that Sky provides as a platform for internet, telephone, TV, and they are seeing short interest come down from 10 to 6% as Virgin Media reduces its debt. It has, maybe, 4.8 million subscribers to Sky's 10.096 million subscribers. It's interesting that their shares are rising. Analysts are raising their forecast there. And if you were to buy Sky now at the current level, it would value each user at each of its subscribers at about 1,500 per user. And for Virgin Media, it'd be about 1,100, which I thought was some interesting maths that I did on the back of an envelope. So sorry, it's a bit of an intense, complicated story on the day that BNY Mellon sponsor this video. So hopefully you'll enjoy it. And if you'd like to read the report, it is at dataexplorers.com/news.